Welcome to Vishal and Company, where equity gurus own Vishal Tura, Taku Ndachena, Colin Botrell, and Maddie Grace examine the week's financial events in real terms, bringing the esoteric blur of public market activity into sharp focus. So come in, sit down, put your feet up, and enjoy.
I can hear you. Yes. Oh, great. Amazing. Yay. Okay, well then, welcome everyone to this week's edition of Vishal and Company. This week, Vishal is going to discuss rising oil prices, Warren Buffett's portfolio update, and if the stock market is about to crash. TK is back to talk about junk bonds and consumer debt. And last but never least, we have Galen here to jump in with fun, sassy commentary along the way. I'm the resident not finance person to ask questions and keep all of them in check if they don't make any sense. And that's about it. All right, Vishal, all yours.
All right, thanks, Maddie. So the big story this week has been the Texas freeze, and millions of people without power. I believe it's being relieved now, but there's still some issues. We've seen natural gas lines become frozen as well because their pipes over there in Texas are a bit too close to the surface. So we are seeing a bit of a bid up here in natural gas as well. But the big story is oil, right? So Texas and oil, I think, everyone knows about Texas and oil. But the U.S. had its largest production freeze or decline in oil ever. With the freeze in Texas, 4 million barrels per day are not being pumped. And that has, played a huge part in the oil markets. And a lot of people are thinking about what that means going forward. Technically, oil is, it was above $60 a barrel. I think that's a number that not many people would have actually expected if we talked about that just a few months ago. Getting back above 50. And on the technical charts, I just want to quickly just mention this before we talk about some of the fundamentals. But there is a large trend line here that people have drawn out going back to 2013, hitting the peaks here. And generally, for technicals, when we have 3 touches, that's a very valid and powerful trend line. So right now, as you can see, this week's chart, the candle is actually rejecting and is looking to close below the trend line here. So this is something to watch going forward. But in my opinion, there is a big zone here at $65 a barrel, and oil is actually still bullish as long as we are above 53.20. The big question is, though, has this rise in oil been something to do with, fundamentals, or is it a commodity? Sorry? Oh, I thought someone said something, or is it something to do with a commodity driven move, which we'll talk about in just a bit. So in supply and demand, a lot of people are mentioning, of course, the new administration's energy plan, and how it's negative for oil. They're also talking about the Saudis. So I want to bring this up, but the Saudis were talking about, they're going to keep their production cuts through February and also into March. But now all of a sudden this week, they are now expected to reverse that and bring production back up. And it has to do with apparently the recovery and also with where oil prices are. But I think maybe a lot of this has to do with the fact that 4 million barrels a day are going offline in the States. So that could be a big factor. So looking at oil prices, is this a supply and demand thing? Is the economy recovering? Are people going to be traveling soon? And that's why, traders are buying oil. Or is this what we've talked about, in past shows, just a drive into commodities in general, right? Hard assets, gold, silver, commodities. We've talked about the commodity index in the past, the Bloomberg Commodity Index, and how it's the lowest it's ever been. So I think that's a big factor going forward, and we're going to be exploring a lot of that. I was just going to ask you. Mhm. 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 Yeah. Mhm. Yeah. 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 And we talked about the solar panels and the base load power, right? We're not there yet, but the interesting thing about this Texas thing is obviously, solar panels are going to work when it's sunny. Hey, Galen, I think on the audio, you sound very quiet. That's what I'm hearing. If you can turn yourself up a bit. Okay, sweet.
How does that sound?
Someone let him know in the YouTube comments. But I was just going to say, also in Texas, we saw the wind turbines freeze. So the wind turbines were frozen as well. And there's actually some people making a case now that the only good source of energy now was actually nuclear. The nuclear stuff was the only things working because, of course, the solar panels aren't going to store baseload power just yet. And if it's not sunny, you're going to have issues. The wind turbines are frozen. The natural gas is, it's good, but in Texas, they built the pipelines too close to the surface. So I think it's a topic to watch. Hey, TK, do you have any comments on oil, man? I know you follow the oil markets.
Oh yeah, I'm loving the whole thing not the Texas thing that's happening, but the move to some of the commodities. I think a lot of the time with the cycles in commodities and the intangible economy, so more of the tech stuff and some of the hot topics.
Yeah,
we tend to have such a short term perspective of what's going on. Long term, usually, as people say, it's over a year.
Mm-hmm.
But here I'm talking about a bigger cycle. This is something that started in 2015, and some of the effects are being felt now. Where the demand and supply thing you're talking about is kind of showing itself. Not to get too excited, because I know Vishal is going to touch on it perfectly, but looking at some of the purchases being made by Berkshire Hathaway, which is one of the most long-term orientated companies that you could think of, by buying into Chevron and Exxon. Not Chevron only, but these companies have been trading below historical lows or trading in a range that's very low for them for the last couple of years because of all these external shocks that haven't actually affected the fundamentals of the company. And it's kind of showing that his purchases are probably just taking advantage of that low price range. Even if it wasn't him, maybe it was his cadets, because he has two investment managers as well. It's something we always forget as well. But it's like taking advantage of that low in the cycle for the commodities. And his exposure usually is through companies. He doesn't actually buy the commodities himself. So it also explains the gold thing that he exited as well.
Exactly.
He probably wanted more cash to go into what's more valuable to him at the time. But of course, the thing that's going on in Texas is kind of an indication that we've talked about this before, that we can't discount old productive methods just because we want to get into the more sustainable ones.
Yeah.
To get to a point where we can fully utilize solar, etc., we have to use some of what we have today to get to a point where that is more efficient on a larger scale. And that's kind of what Elon is trying to do. And he says it himself, that to get to a point where we, I know he's back again, but to get to a point where we use the energy from solar or whatever else he's trying to do, we have to burn through some of the stuff that we have today, which is coal, oil, etc. So yeah, I'm liking what's that. As well, I'm biased. I hold stuff that natural gas and oil as well. So
just in a few shows ago, we talked about, remember, like ExxonMobil, right? Like if things are overvalued, what looks undervalued? And we came up with cruise lines, airlines, and energy. And we thought, hey, the energy stocks probably the smartest one to pick out of the bunch. And seems like that's what people were doing. But this is a chart of the commodity index. For some reason, I can't pull up the Bloomberg one on my trading view here, but it looks pretty much the same. And this is why a lot of the commodity guys are very excited, because we could have a very long way to go. And a lot of these commodity indexes are actually skewed heavily towards oil. Oil makes a large part of these indexes here. And, there are actually a lot of people talking about commodities being the cheapest thing to buy out of everything else in the market.
Most realistically priced right now, because everything else is so utterly out of this world in terms of valuation. Musk is using this to his biggest advantage, because he knows goddamn well that come time next year, Tesla's going to be scraping the ground, and he's grabbing as much free cash as he can and spreading it around, doing all sorts of more promises, that 15, 20-year timelines that will never follow through, but just to keep that money flowing. And I don't know if that's business.
Yeah.
Right? It's keeping ahead of the game. And in that respect, he's doing quite well.
Right.
Is he doing a business?
Yeah.
Vishal, could you explain for like any new investor why this would be like a good thing to buy? Because it just looks like bad.
like oil in general, or the commodity index?
Well, I mean, look at your trend line. It doesn't look all that positive.
Yeah, the chart you just had up. It doesn't look like a promising thing to the eye.
This is the weekly chart. So I'm just highlighting like each of these candles here represent 1 week.
Okay.
But yeah. So I'm just saying, this area where it's at right now is a pretty, resistant zone. So we could see some sellers here, but a lot of people are watching this zone for a breakout eventually, right? So,
okay,
I wouldn't buy it like right now. I wouldn't buy oil right now. I mean, maybe there's some other charts we can look at long term. In the short term, it looks like oil is going to pull back, probably back to 53, and then from there, we can analyze it. But with the commodity index, like I just had that up because if you are a long term investor, it just seems like, just as Galen was saying, right? It's priced correctly, but know that this is a market where money is going to flow into things that are priced correctly, right? They want to look for cheap things. And commodities are probably where money is going to go. And there are a lot of analysts already out there stating oil over $100 a barrel, not necessarily due to supply and demand, but more to do with this move into commodities because it is cheap and it is real, it is tangible. And as Tika alluded to, Warren Buffett has bought Chevron. He did open 3 positions in Berkshire Hathaway's portfolio. This is the little filing we got. I know it's a bit tough to read here, but Verizon Communications and Chevron, and I can't really read that, but don't worry about it. Those are the 3 companies that he's just initiated. And you guys know when Warren Buffett buys stocks, right? That's the whole market pays attention. Generally, CNBC is always saying, whenever there's a market crash, oh, when is Buffett going to buy? When can he buy? Hopefully he buys soon because that will, dissipate all the fears that retail investors have. So Buffett did buy. Last year, during the big fall, he didn't really buy much. He bought a natural gas company, right? So if you guys remember that, he did initiate a position into natural gas, and now he's initiated a position into Chevron, who also, by the way, made a big deal this week on some geothermal technology as well. So it's not just oil. They are looking at other aspects too here. And we talked about Chevron ranging here, and it looks like it is ready to break out of this range and do a breakout run. Probably a lot to do with Warren Buffett as well, but maybe even the rising oil prices as well. So let's just look at some of the moves that he made. And I know some people aren't going to really like this, but yes, he did close his Barrick Gold position. He is out of gold. And he also did sell his entire stake in JP Morgan, which is breaking out into all-time record high. So the largest bank, I believe. And he got out of his position. He's also out of PNC Financial, M&T Bank. So he has trimmed a lot of financial positions. And he actually did close his Pfizer position as well. We talked about Chevron and Verizon. This is the other company there, Marsh & McLennan. These are the new 3 stakes he's opened, but a lot of people are talking about Chevron. He also, I believe, trimmed his position in Apple. So he's taken profits in Apple. He's also taken profits in US Bancorp, General Motors, Wells Fargo. He took some profits out of Suncor as well, and Liberty Lilac Group. So interesting, take here. And a lot of people are actually focusing purely on this trade, the gold one, and of course, the trade in Chevron. That's sort of being taken the Wall Street by surprise, I guess, in a way. But Buffett is back into energy, but I don't think he's ever left energy. He had a large stake in Suncor, and as we talked about last year, a few shows ago too, he opened a natural gas position. So TK, what do you have to say about the Oracle of Omaha? What do you think about his moves here?
I think it's pretty telling of where he thinks we are in the market, and he's been sitting on $120 billion in cash. And
a lot of cash. Yep.
And when did he buy his Apple stake? 2016, 2015. He doesn't do much. His portfolio turnover is basically non-existent. If he is making buys, it's usually when everybody else is pretty pessimistic about whatever market is in. But I think it's also important to remember he has let go of some of the responsibilities of the Berkshire portfolio.
Yep. Mm-hmm.
And on top of the Berkshire portfolio, there's also the insurance side that has a mutual fund attached to it, basically run by somebody else as well. So some of these positions that open and close are not him a lot of the time. So even if you look at his entire portfolio, he has the Vanguard index in there, the VOO as well. And he's a big advocate of the index, but it's such a small position relative to his whole portfolio. But the big ones, obviously, I would focus on is not Barrick Gold or the other one. It'll be Chevron because it's now one of his top 10 holdings, and Apple, I guess.
Yep, Apple.
Because it's one of his top 10 holdings, and usually he has an emphasis on a focused portfolio. 85% of his top 10 holdings, are 85% of his total portfolio. Let that sink in. He owns a bunch of companies, but 85% of his top 10 holdings are in his top 10 big picks. And these are companies he's held for years: Coca-Cola, Bank of America. He's trimming Wells Fargo now. And the outside of the top 2 and the new holding in Chevron, the ones that I think are more telling of what he thinks about what's happening underlying the economy are him letting go of his investment banks and reducing some of his stakes in his commercial banks. So I think he wanted to get out of the investment banks faster than the commercial banks because of the 4% junk bond yields we talked about last week. And not to go into too much of the detail, I would love to, but basically it's not a great sign if uncredit-worthy companies are able to get cheap credit.
Mm-hmm.
And the people underwriting this credit is usually the larger institutions, the JP Morgan, the Goldman Sachs, and other investment houses.
Yeah.
And maybe it's because the credit policies in the department is a little bit looser now because of how low interest rates are. So in the short term, I think it's better to let go of some of the profits and take profit from what he has. But at this point, we're all speculating on what the actual choices behind these big moves. With Berkshire, we kind of always have to remember it's an insurance company at the end of the day. So it has policies that it needs to, pay off if things happen. So he could move money for any sort of reason. A lot of the time it's to cover insurance claims. And it's kind of hard to tell why he's selling positions most of the time. Before, in his old partnership, it was easy to understand.
Mm-hmm.
He was moving cash to move into other positions, but now he can move cash for many reasons: to buy back shares, or to pay out insurance claims, to reinvest into the railways, or etc. Buy other positions, or many things could be happening with his new decreases and increases. So I'd rather wait for him to go on CNBC and explain it as he always does, and talk about farms and why he hates Bitcoin and all this. And I'd rather have him say it than actually speculate on what actually happened. But the ones I think we should watch out for more, and that is the biggest indicator, is the banks.
The bank,
The bank holdings.
Just going off of that, man, like market crash, that actually was trending over the long weekend. I wrote a post about, is the stock market about to crash, on Monday, and I mentioned that we should be looking at bond yields and also the US dollar. So let's quickly just look at the market charts here. As you can see here, this week we have actually seen 3 red candles, which is quite rare in a row on the markets recently. Going down here on the 4-hour charts, you guys probably see what I'm seeing, that good old head and shoulder type pattern here on the S&P. We also have it something like that on the NASDAQ. We also have that on the Dow Jones, and the Russell 2000 actually did break below, pulled back to retest, but is not gaining any more momentum here. So a lot of people are talking about a stock market crash. I will just show you the article that was trending because it gives us some comparisons. But just before we do that, I got to mention the 10-year yield, because this is what I was watching and what we were watching on the Equity Guru Discord channel to gauge where markets are going. The 10-year yield is important because in America, the mortgage rates and all the loans, it's based off of the 10-year. And you can see here that interest rates are spiking. It is 1.34%. Generally, this is a good sign, right? Because what this is telling us is that money is leaving the safety of bonds, which causes interest rates to spike. And then that money has to go somewhere, right? Generally, we expect that money to go into the stock market. That's what we've been seeing for quite some time. But this time, when interest rates were spiking quite rapidly, that money was not flowing into the stock market. It was rather flowing into the US dollar. And if I can show you that chart, there it is. Did take a hit recently, but I mean, we are getting some support here. And when I see the 10-year yield move up and I see the dollar moving up, that's generally a bad sign, because that's telling you that people are freaked out, the yields are going too high, and instead of shifting money into stocks, the whole asset allocation model, that money is hiding into the US dollar. But it could, we can make that case, but technically that money could be flowing into Bitcoin, right? Rather than going into stocks, or it could be flowing into certain commodities. But we weren't really seeing any of that on Monday. So going forward, folks, we have to watch that 10-year yield. And a lot of people are mentioning, has the Fed lost control of the bond markets? Are we going to be seeing interest rates rise higher? And, it's really tough to tell, because technically it should be moving higher. The rates should be going up to 1.45, 1.5%. But of course, when debt is at record highs, rising interest rates not really what you want to do to service that debt. So we're going to have to see if the Fed is going to do something about this. But I just want to show you this article here by Forbes. This was trending over the weekend. And what they did is they looked at comparisons between this market and the dot-com market. And they came up with a few comparisons here, and I'll just go through them. And if you're interested in what it actually means, you can read a bit more about this. But they looked at the S&P 500 Shiller Cape ratio, and it is indicating that the market is bearish. So bearish is for market crash, bullish is for markets continuing to rise. So we have 1-0 here on the bearish side. The American Association of Individual Investor Sentiment is bullish. And I think this probably has to do a lot, of course, with, the retail traders jumping in. So it is bullish, meaning that, we can still move higher. And look at this comparison here. Currently 46% in the dot-com bubble. It was 75% in the individual's investor sentiment. The volatility index, bearish. The S&P market cap concentration, bearish. Personal savings rate is actually bullish, but obviously it's likely due to the fact that you can't really go out to spend much, and you're probably just spending on necessities, really. So that's that. IPOs, bearish, because a lot of IPOs are doubling on their first days, which is a sign similar to the dot-com bubble. They also here have the Warren Buffett indicator indicating a bearish. Put-to-call ratio for options, bearish. Margin debt to cash, bearish. Federal Reserve assets is bullish, and I think this is the most important one because we know.
Up very quickly to Warren Buffett, you just have made a comment about something that I thought was actually kind of interesting. One of our Twitch viewers actually made a comment about Buffett's divestiture, I guess you could say, of his portfolio, or at least his rebalancing of it. And he's just saying that he's less planes equals less oil. He's trying to get out of all that. He's trying to dump the gold because it's too expensive to actually produce for him, right? So there's all these things that I think he's trying to reinvest in normal industrial industries, the value industries again. Do you think that's the switch he's making? I think the dive into gold may have been a panic. Possibly.
I mean, Buffett is a value investor, right? So a lot of these companies, the similarities between these companies is they pay dividends. Even Barrick, I believe, paid dividends too, right? So we got to remember that, Warren Buffett makes. Oh no, they don't. Barrick doesn't pay dividends.
No. So I was thinking that he was actually trying to get a hold of an asset, at least just a sort of stability, because he wasn't too sure about how the currency situation was going to flow over the next little while. And I think that was really what he was trying to do, is he was trying to back himself with commodities. And now I think he realizes that the fiat at this point is still relatively safe. And so he's moving back on to, I would think, value investments. And, that's me saying all that kind of crap.
Right.
But,
But he's usually done this in the past where if you read some of his reports, he says that once he realizes a business that meets a certain metrics, he'll open a position, and because he's larger now, he can buy stocks throughout months for one company. But the Buffett effect, once people realize that he's doing the buys, the prices usually go whichever side he's betting on. And the same thing happened with Oracle. Obviously, it's not a commodity company. But he bought shares in Oracle, and it was reported in the 13F. And then in the very next 13F, he had sold his position out, kind of similar to what he did with Barrick Gold. And most of the time, his case for that is, at the time of purchase, I was sure of the economics of the underlying business. But as time moved on and I got more information, I was more unsure about the actual underlying business than I was when I was doing my original analysis. And that's it. He opens a position and he continues to gather info through annual reports or whatever's coming through as time is moving. So he could have sold out because maybe, like you said, Galen, he realized it was too expensive for Barrick Gold to continue to manufacture profitably at the current prices. it's not as sustainable, and it's probably going to need more reinvestment for them to do that.
And he's not a miner. He's never been in gold before. What's he going to do?
Yeah, so I think it's a safe. It's kind of like the airlines thing just before. Was it just before or just after the March crash? I'm forgetting the actual.
I'm just going to reach out very quickly to the people on Facebook because I just had a comment from Facebook that my voice is low. Sorry, guys, I'm taking control of the show. Is it better now?
I hope it is now.
Hope it is.
Yeah, his entry and exit of all things should not even be focused on a lot of the time, because he's always kind of filtering through and opening up positions as he goes. And sadly, at his size, when they make buys, he's usually higher than the daily volume because of how many blocks he's buying. Mm-hmm. And he could only buy over time. And once he realizes, okay, the value I was thinking was here is not actually there anymore, he can forego the whole position because he didn't buy enough that would move Berkshire's ticker, its performance. Because for him, his portfolio, I think, at the time of this reporting is what, $230 billion dollars. Opening up a position that's worth $1 million doesn't really move the ticker. Let alone $1 billion doesn't move the ticker that much as well. So it's kind of hard to tell exactly, what he's doing. Mm-hmm. But I can tell you, he always wants to have cash on hand outside of the portfolio for his insurance company, because it's one of the largest auto insurers in the world, in America.
Yeah. So he increased now. It's $270 billion, the portfolio value. And the largest three holdings are 63% of the entire portfolio. And the top five are Apple, Bank of America, Coca-Cola, American Express, and Kraft Heinz. And the Kraft Heinz one's interesting because
that was one that really shot him in the foot. That was
it did. It did, yeah.
That was
it did, but I mean,
bad.
Take a look at this. This is the type of chart I love to trade, and it looks like we've had the downtrend, we've had that range, and it looks like we're beginning a new uptrend in Kraft Heinz. So I think this is something I'm going to actually buy options on, if not shares. But just to quickly finish up here, so Federal Reserve assets bullish, and then finally it was just the federal funds rate, because we know interest rates aren't really going anywhere. So pretty much all these indicators here, comparison to the dot-com bubble. And again, I didn't trade the dot-com bubble, but we have a few members in our trading room that have and are saying that this is very similar, and they're getting the same sort of feelings with this market and the dot-com bubble. But the market crash or the bearish sentiment here is outweighing. I think it's 7-3. That's the score from bearish to bull.
It's coming.
I'm not going to say that the market's going to crash, because I look at the charts and I just wait for that. But eventually, there will have to be a pullback. We just don't really know when. I'm looking at this chart here technically. We heard Janet Yellen mention stimulus yesterday, and that was like shoved into her face this morning. And I think it was a way to try to keep the markets propped up, right? Hey, look, more cheap money is coming. Don't worry. But eventually, that's not going to work, right? Yep. And we've talked about that, how the central banks are pretty much out of tools in their toolbox. All they can do really is just throw money at this. And
do you know why? Do you know why I think the market crash is coming and going to come, and the trigger that will make it happen is when the economy itself, which is completely detached from the stock market, actually pits like it's trying to do, and all these people that have been making all this lovely money on the stock market are going to start to pull it out so they can pay their mortgages. Then the stock market is going to start to pit.
Yep. TK, you have any opinion on where the markets are?
Oh, yeah. I think to kind of round it off perfectly here from what Vishal's saying is we're in a time that's kind of uncertain. A lot of people are moving money in a way that you can't really tell where we are. And it's a weird thing to say, but I think if you spend 10 minutes in your year trying to predict where the market is going, you've wasted 8 minutes of the year. Yeah. Because you have nobody has an idea of where it's going to go, where the cycle begins, where the cycle starts. For all we know, the bull can continue going for the next 10 years. if things happen in a certain way that, you couldn't predict.
What's the longest bull cycle that we've ever had? Does anyone know?
I think this is the one now.
Oh, is it?
Yeah, this is the one.
Okay.
TK, I'm going to challenge you to do SparkNotes version
Oh, shit.
of your topics. You always get the short end of the stick because you go second. I'm so sorry.
No, I think it's the sharing the same sentiment that Vishal is saying, is be cautious as an investor today, no matter what purchases you're making. Even sitting in cash is an opportunity cost at this point. And consumer debt in US and Canada, the data I look at, is mixed, which is never a great sign. It's not the worry, that's not people's main concern. The main concern for most people is the corporate debt, which is at historical highs.
Mm-hmm.
So, for example, if I was to go out and buy a bond today on Tesla, it would give me 8% yield at the end of its maturity, but I'd have to pay $1.10 for each dollar and only get back like 2% in real terms. So bonds are expensive, corporate debt is ballooning, and this is just the same thing. It's a domino effect. If interest rates if the 10-year yield continues to increase as it is, eventually the entire yield curve will have to adjust for that. And it'll make debt more expensive, causing another. And this won't be an economic crisis like we had in March, but it'll be a financial one that you can't really tell what will happen after that. And that is what I think Buffett's sales of the banks is kind of indicating to me that, hey, we need to watch the financial system now. The economy we know is in its own world, but let's really watch the financial system. Something is not right.
Yep. That's what a lot of people said too, right? Like, we haven't had our Lehman Brothers event yet.
No.
Yeah, we haven't.
On that note, because we all need more crises in our world, we will end off. We made pretty good time.
We did.
Thank you, everyone, for watching and hanging out, and we'll be back next week.
Absolutely.
Thanks, guys.
Take care, everybody. Bye.
Bye.